Hello everyone and welcome back to my YouTube channel. In today's video, I am going to discuss one of the most important chapter of class 12th business studies, that is financial market. In this video, I am going to discuss the meaning, components and different types of financial market. So let's start. The first point that we need to cover is the basic meaning of financial market. Financial market refers to that market which involves buying, selling and exchange of financial securities. These financial securities generally include shares, debentures, bonds, commercial bill, treasury bill, bill of exchange, etc. So we can say that it is an intangible market where the investors, brokers or different financial institutions sell, buy and exchange the financial assets or securities with each other. Now coming to the second point, that is components. Components generally refers to the main participants that plays a very vital role in the financial market. The main components or participants are government, RBI, that is the Central Bank of India, various commercial banks, financial institutions, general public, companies, investors and brokers. These are around 7 to 8 major participants that plays a very vital role in performing all type of financial transactions. Now coming to one of the main and most important part of this video, that is the types of financial market. The financial market is divided into, first is your money market and second is your capital market. Now it is very important that you need to understand the difference between the money market and capital market, because when question comes they generally ask differentiate between the money market and capital market, or it comes what are the different forms of financial market and explain it through a tabular differential format. So it is very important that you need to understand the difference between the two. Coming to the first point of the difference, that is the meaning of money market and meaning of capital market. Money market mainly refers to that type of market which deals in short-term financial assets. That is, the financial transaction or the financial investment is generally for a short time period. Whereas in case of capital market, which refers to that market in which the transaction investment is generally done for a longer time period. Okay. Now coming to the first point, that is the time period. In money market, the investment is done generally for 1 year or less than 1 year, whereas in capital market, the average time of investment is 5 years. The second point is ROI, that is return on investment. In case of money market, the ROI, that is return on investment, is generally low, whereas in capital market ROI is high. Now it should be noted that why money market have low ROI whereas capital market have a high ROI. It is because of the time period. Money market deals in short time period, generally for 1 year. That is why the return on investment that you get is generally less. Whereas in case of capital market, where the investment time period is generally very high, in that case the ROI is also high. Now coming to the amount of investment. In case of money market, the amount of money or capital invested is very large, whereas in case of capital market, the amount of investment is small. Money market have large investment because people think that if we invest large amount of money for a short time period, they can get more interest. Whereas in capital market, people try to provide or try to invest small amount of money or capital in the market. Now coming to the fourth difference, that is the risk involvement. In case of money market, the risk is less as compared to the capital market. In case of capital market, the amount of risk is very high because of long time period. In case of money market, the risk is less because of short time period. People invest in 1 year, they get back their interest with the principal, and again they can invest in for 1 year. But in case of capital market, people when invest for a long time period, the chances of risk is also high. Now coming to the last difference, that is tools. In case of money market, the main tools are treasury bills, bill of exchange, commercial paper, commercial bill, certificate of deposits, etc. Whereas when we come to tools or instruments of capital market, it include your equity shares, preference shares, debentures and bonds. So these are the 5 to 6 main differences between money market and capital market. Let's revise the differences. In the first, we have the meaning, then we have the time period in which one money market has for 1 year or less, capital market has 5 years on an average. Amount of ROI, money market has low ROI, capital market has high. Whereas in case of amount of investment, money market consists of large, whereas capital market consists of small investment. Risk involvement, money market is less risky, whereas capital market is more risky. And last, tools, money market consists of tools such as treasury bill, certificate of deposit, commercial bill, etc. Whereas capital market consists of tools such as equity shares, preference shares, debentures, etc. So in a nutshell, we can say that financial market is one of that market that plays an important role for financial transaction and for investment purpose. Now, in my upcoming video or my second video will be on stock market and SEBI. SEBI is Security Exchange Board of India. The next video will be give you complete knowledge about stock market, how to do transactions and what is SEBI, because these two topics are also very important for class 12 business studies. With this, I end my video. If you like it, please subscribe it, share it. Thank you so much.